The extremely hot housing market appears to be cooling off. New details from Moody's Analytics says 183 different markets could see prices drop by up to 20%. On average, it estimates prices will decrease up to 5% nationwide over the next year. So for more on this, I want to bring in Mark Zandi. He is the chief economist for Moody's Analytics. Back in May, you predicted that home prices would drop as part of a so-called housing correction. So let's talk about it right now. The price of houses typically do start to go down at the end of August and sort of keep going down. The high is always in the springtime. But you're talking about something that's more than just a cyclical drop in price. You're talking about a correction. What is a correction and what caused us to need a correction now?
Yeah, you're right. You're talking about seasonal house price movements, and this is not that. This is declines in housing values in different parts of the country. Nationwide, peak to trough, when it's all said and done, probably about 5%. Obviously, that means other parts of the country will experience price declines that are in the double digits. Behind this is the fact that mortgage rates have risen very significantly in a very short period of time. So if you go back, let's say about a year ago, Anne-Marie, mortgage rates were below 3%. That's a 30-year fixed rate loan, pretty close to a record low. And now it's double that. So mortgage rates have doubled in a year. And when rates were low, demand was strong, prices went skyward. Now with higher mortgage rates combining with those now higher house prices, homes are no longer affordable. I'll give you one quick statistic. For the typical homeowner buying the typical home with a 20% down payment, at the current mortgage rate, they'll be paying $500-600 more a month on that mortgage than they would have a year ago. So for many first-time home buyers, that's just unaffordable. So demand is drying up, and therefore prices have to adjust and come back in. It's just a reflection of the movement in mortgage rates.
That makes sense. But I thought this country was dealing with sort of like a decades-long shortage in housing stock. And so I thought, well, maybe that would be another factor that would keep house prices up. But you say no.
Well, that'll help. I mean, I think that's why this is a correction. We're down 5-10%, peak to trough, not a crash. If you go back in the wake of the housing bubble and the financial crisis a little over a decade ago, prices fell almost 30%. And so this is a correction. It's coming off of very high house prices, but it's not the kind of broad-based crash in house prices we saw, a little over a decade ago. So you're right, that shortage of homes, and it's an issue. It's a problem. It's one reason why prices went skyward when mortgage rates fell a year ago. Will help support the housing market. It just won't save it from this correction.
So what I find very interesting, though, is that different markets vary widely. Can you talk about why you think there's going to be a more drastic correction in some markets than others, and what give us a few of the cities that are going to see it the most?
Yeah, exactly. The most previously juiced up markets when mortgage rates were really low in the Southeast and Texas and the Mountain West, that's where prices went skyward, and that's where affordability is now a problem with these higher mortgage rates, and that's where we're going to see the most significant price declines, going forward. So examples, Charlotte, North Carolina, Atlanta, Tampa, Austin, Texas, Boise, Idaho, Phoenix, Vegas. Those would be the areas where valuations are out of whack. Affordability is a real problem now. Demand is falling. We'll see some prices come in. The other thing that's going on in some of those markets, previously you saw so-called flippers come into the market. These are folks that would buy with the intent of selling very quickly to make a quick buck. And that works when house prices are going up quickly, but that's not working now. So they're going to get out of the market. They're going to be wrung out of the market, and that'll cause more price weakness in places, again, like Phoenix and Atlanta.
All right. So if you're looking for a house and you want to relocate, he just told you the cities to wait it out, and perhaps the prices will come down low enough. Mark Zandi, thank you very much.
Yeah, sure thing.